Are you tired of high-risk investments that keep you up at night? Looking for stable ways to grow your wealth in 2025? Well, you're in the right place. Today, we're breaking down the 10 best low-risk investments you can make in 2025. From secure government bonds to innovative options like peer-to-peer lending, we'll cover it all. So whether you're a seasoned investor or just starting out, there's something here for everyone. Ready to secure your financial future? Let's get started. 10. Stable blue-chip stocks. Blue-chip stocks represent large, financially sound companies known for their ability to operate profitably in various economic conditions. These companies are industry leaders with established business models, global market presence, and strong brand recognition. Their stock prices are less volatile compared to smaller companies, and they often pay consistent dividends, offering a steady income stream. In 2025, these stocks are particularly appealing as they navigate inflationary pressures and market uncertainty with resilience. Sectors like technology, healthcare, and consumer goods lead the pack, ensuring investors a safe haven for long-term growth. 9. Municipal bonds. Municipal bonds are fixed-income investments issued by local and state governments to fund public projects. They are generally low risk because they are backed by the creditworthiness of the issuing municipality. The key benefit is their tax-exempt status, making them an attractive choice for individuals in higher tax brackets. As governments push forward with infrastructure and green energy projects in 2025, munis tied to such initiatives will likely gain popularity. For investors, they offer a predictable income stream and the satisfaction of contributing to community development. 8. High-yield savings accounts. High-yield savings accounts are an excellent alternative for parking emergency funds or short-term savings. They provide interest rates significantly higher than traditional accounts while maintaining liquidity, meaning you can withdraw your money whenever needed. With competition among online banks and fintech platforms growing, many accounts now offer user-friendly apps and no minimum balance requirements. In 2025, as interest rates stabilize, these accounts will continue to be a go-to for those prioritizing safety and accessibility while earning modest returns. 7. Dividend-paying stocks. Dividend-paying stocks provide a dual benefit: steady income from dividends and potential for stock price appreciation. These stocks are often from companies with strong cash flows and a history of rewarding shareholders, such as utilities, telecommunications, and pharmaceuticals. The regular dividends can be reinvested to compound returns, making them ideal for retirement accounts. In 2025, these stocks are a hedge against inflation, as dividends often rise alongside increasing company revenues, ensuring a consistent income even in uncertain economic times. 6. Real estate investment trusts, REITs. Real estate investment trusts, REITs, offer an exceptional opportunity for individuals to invest in real estate without the complexities and responsibilities of owning physical property. These investment vehicles pool capital from multiple investors to purchase, manage, and operate income-generating properties. REITs cover various real estate sectors, including commercial buildings, residential apartments, retail spaces, warehouses, and even specialized areas like healthcare facilities and data centers. One of the primary attractions of REITs is their ability to provide a steady income stream. By law, REITs are required to distribute at least 90% of their taxable income to shareholders as dividends. This makes them particularly appealing for income-focused investors, as the consistent dividend payouts can supplement or replace traditional income sources. Moreover, REITs are traded on major stock exchanges, offering liquidity that traditional real estate investments often lack. Investors can buy and sell shares easily, making REITs a flexible option for those looking to diversify their portfolios. In 2025, the appeal of REITs is set to grow due to rising demand for both residential and commercial real estate. With urbanization trends accelerating in businesses seeking modernized spaces, REITs are well-positioned to capitalize on these shifts. Additionally, the rise of e-commerce has increased demand for industrial spaces like warehouses, further bolstering REITs specializing in logistics properties. 5. Treasury Inflation Protected Securities, TIPS. Type Bs are U.S. government bonds specifically designed to protect against inflation. Their principal value adjusts according to changes in the Consumer Price Index (CPI), ensuring your investment keeps pace with rising costs. As inflation increases, the value of TIPS rises, and interest payments are calculated on the adjusted principal. In 2025, with lingering inflation concerns, TIPS remain a safe choice for preserving purchasing power while providing moderate returns. They're a must-have for risk-averse investors looking to shield their portfolios from economic instability. 4. Peer-to-peer lending platforms. Peer-to-peer (P2P) lending platforms revolutionize the traditional lending process by directly connecting investors with borrowers. This innovative approach eliminates intermediaries like banks, enabling investors to earn interest by funding loans for personal or small business purposes. Popular platforms such as Lending Club and Prosper have gained traction for their ability to simplify the lending process while offering competitive returns to investors. The key advantage of P2P lending lies in its transparency and flexibility. Platforms thoroughly evaluate borrowers' creditworthiness, assigning them risk grades and providing detailed profiles. This allows investors to choose the level of risk they are comfortable with, tailoring their portfolios to match their financial goals. Borrowers with higher credit scores may offer lower returns but come with reduced risk, while higher-risk loans can provide higher potential returns for those willing to take the chance. In 2025, advancements in technology and data analytics have significantly improved the reliability of borrower assessments. Enhanced algorithms analyze borrowers' financial behavior, credit history, and even alternative data, minimizing the likelihood of defaults. These developments make P2P lending a more secure investment option than ever before. Additionally, platforms now emphasize portfolio diversification, encouraging investors to spread their capital across multiple borrowers to reduce individual exposure. 3. Certificates of deposit (CDs). Certificates of deposit (CDs) are time-based savings instruments offered by banks. You deposit a fixed amount for a set term, and in return, the bank pays a guaranteed interest rate. The longer the term, the higher the interest. CDs are considered one of the safest investment options because they are FDIC insured, meaning your principal and accrued interest are protected up to $250,000. In 2025, as banks offer competitive rates to attract savers, CDs are an excellent option for risk-averse investors who can afford to lock in their funds for a period. They're ideal for meeting short-term financial goals with absolute certainty. 2. Low-cost index funds. Low-cost index funds track the performance of major market indices like the S&P 500 or the Dow Jones. These funds offer instant diversification as they spread your investment across hundreds of companies within a single index. Since they are passively managed, their fees are minimal compared to actively managed mutual funds, meaning you keep more of your returns. In 2025, index funds remain an attractive choice for investors seeking steady, long-term growth with minimal effort. They are particularly appealing in volatile markets, as their broad diversification reduces the impact of individual company losses. 1. Government bonds. Government bonds are widely regarded as the safest investment globally, backed by the full faith and credit of the issuing government. Options like U.S. Treasury bonds, which come in various maturities, provide guaranteed returns with virtually no risk of default. Other stable governments, such as Germany or Canada, also offer reliable bond investments. In 2025, as investors navigate an uncertain global economy, government bonds provide a haven for preserving capital while earning consistent interest. They're ideal for retirees or anyone seeking stability in their portfolio without sacrificing peace of mind. And there you have it, the top 10 low-risk investments for 2025. Remember, investing doesn't always have to be about taking big risks. Sometimes, steady and secure options can pave the way to long-term financial success. Which investment are you most excited to explore? Let me know in the comments below. Don't forget to like, subscribe, and hit the notification bell so you don't miss out on more smart money tips. Thanks for watching, and I'll see you in the next video.